Hey everyone, checking back in the charts after being away for a few days to end last week. So we ended with, again, an astounding bullish close on Friday, considering all the big tech names that had bearish reactions. So the theme for the last week and a half for me has been every time we have seen a scenario where bulls could give up and bears could take back over again, bulls have been resilient and persistent with their dip buying to keep control. That being said, we got the FOMC on Wednesday, and that can all change very quickly. But I'm watching the daily higher lows as my guide. We've got a higher low, higher high, higher low, higher high. Granted, the most recent higher high is not seeing a whole lot of follow through. And so whenever we see that, we zoom out and we scout a potential rising wedge. So keeping an eye on things, I would be watching something like this. That's the first time I'm seeing that. Looks pretty good. Pretty much 3 touches here, 3 touches. So this is worth paying attention to. And what it boils down to me is a very simple statement. If the NASDAQ does not break daily resistance, and it didn't because of tech sector weighing it down, pretty much the way it played out is healthcare and financial sector bulls took the S&P 500 to a higher high, and the tech sector bears kept the NASDAQ from getting that higher high. So the NASDAQ has a daily double top, and we can clearly say that the broader market as a whole, the bulls aren't going very far if the NASDAQ does not get over this resistance level. Individual sectors can remain stronger, but if the S&P 500 and the NASDAQ want to put in any kind of bottom, the NASDAQ has to participate. So I'm watching this tightening range, 12-hour here. We've got our high, low, holding support, pretty much a double bottom, lower high, and now we're looking for a higher low. So a tightening range heading into the FOMC, not surprising. And whether or not the NASDAQ can break that resistance is going to be key. That's the resistance for SPY and the NASDAQ. And again, the simple statement is if the NASDAQ doesn't break, the S&P 500 is not going to follow. And today was a perfect example. We had a 15-minute equilibrium on the NASDAQ. Lower high, higher low, double top, bear break. If you are not watching the NASDAQ and you are only watching SPY, it's the same tightening range. It broke bull straight into a dump out of nowhere. If you were watching the NASDAQ, you know exactly what happened. If you weren't, you got caught off guard and the bull break could have potentially faked you out. So it's the same thing. This 5-minute bull break or this 15-minute bull break is going nowhere on SPY unless QQQ breaks resistance as well. And it didn't. It double topped by a penny. The dollar is holding weekly EMA 12. That is notable. We confirmed the weekly downtrend with 0 follow through. A confirmed downtrend with 0 follow through means zoom out and scout a flag. This is a potential, whatever time frame we want to look at, 2-week bull flag. Again, FOMC reaction is going to dictate a lot here, but we've bounced on the daily now almost a 50% retracement. The last time we checked in, for me, on Wednesday, I said the most important thing from here is what is the response to the next consolidation on the daily? Can the S&P 500 see a higher low and higher high? The answer is yes. But another major factor that I was talking about is the dollar has to see the lower high and lower low as well. And it obviously has not happened. And again, the 50% bounce retracement is creating some space for the bulls to try and regain a daily uptrend once this current bounce tops out. So I'm now a lot more cautious as a bull because of the dollar holding weekly EMA 12. Bring on the FOMC. SMH, 5 days of sideways. Pretty much, if I'm looking short term here, these are the only levels that I care about. 185.45 and 193.07. You can see a 5-day range. And if we see a bear break of this range, our weekly lower high is set, and we remain in a weekly downtrend. We know semiconductors have been weaker overall, and we know the NASDAQ has been weaker as well. So QQQ divided by SPY shows weakness. SMH divided by QQQ shows a little bit of strength, and that's because big tech has been dragging QQQ down. But again, we're watching for the semiconductors to potentially give us a weekly lower high. INTC, the swing trade from a couple weeks ago, daily inside bar today, pulling back a bit after unable being unable to break the high of Friday with a double top by 4 pennies. Daily uptrend is my guide here as well. I forget exactly what my entry was. 2670s. So I'll probably stick my stop under this base at this point to have very low risk, knowing that we're just looking for a weekly lower high to be the result of this bounce, and we have to confirm a weekly uptrend if we're going to get the monthly bounce, which is what my swing position is ideally looking for. Tesla, relative strength today. So trying for this little inverse head and shoulders like pattern. And Tesla divided by QQQ showing us that it's attempting a daily trend change as well. We've been relatively weaker for months ever since we topped out and confirmed this daily downtrend. So it'll be notable if it regains an uptrend, and that would be Tesla breaking 233.81. Let's just call it 234 to try and confirm the first daily uptrend since we topped out at this resistance zone. XLV, still the strongest sector. Daily stair-step pattern. Granted, the higher highs are starting to lack a bit of follow-through. Daily consolidation will not surprise us the next time it happens, but we will be scouting a daily higher low. 133.27, we're testing 6-month highs here. Financial sector also strong. Daily inside bar today. Not quite as strong as healthcare, but this market bounce the last 3 weeks is because of XLF and XLV. Just that's why we've been bouncing. The NASDAQ has participated at times, but overall, it's been a drag on SPY as opposed to helping. Same thing for XLF. Daily stair step. We know consolidation will be inevitable, but there's a lot of space for a daily higher low to form. IWM. Also seeing a bit of follow through. Also still has a lot of proving to do for the bulls. Tightening monthly range here. Pretty much a double bottom. And anything under 295 would be a monthly lower high. And again, it's just another range where it doesn't feel like we're extremely tight, but we're definitely tightening up. It's 6 months. It's a wide range. It's a very wide range. We've been trading within it for, what is that, 438? What, 25% range or so? We can trade within it for another couple months. All depends on FOMC, at least in the short term. The good news for bulls is, even if it's a bearish reaction to the FOMC, as long as it's not a collapse, we will be anticipating XLF, XLV, and IWM to give us daily higher lows as a result of that pullback, at least initially. Biotech sector getting tight over the last 4 days. So we pretty much topped out after a key resistance break with no follow through. We've established support. We rejected just under resistance. So all I care about is 80.47 and 84.24. Growth names not participating as much. ARKK. So we can see the difference here is SPY broke to the higher high Friday. NASDAQ did not. And growth names did not. So ARK didn't break the high of last week to end the week. PLTR did not, but it did set a daily higher low today. Who else? XBI did not. So still tightening up sideways. And we have to see if this bull break goes straight into daily consolidation. It's a little bit of a red flag because that is a weekly uptrend being confirmed and a monthly higher low trying to form straight into a lack of follow through. But we would need a bear break of 80.47 for us to call this a failed bull break. Cannabis names getting a big pop today. Again, it's the season we knew to be watching heading into midterms. And so we're in a positive news cycle. And so we've had multiple news events where we get the big spike. Granted, we gave it all back one time. Another big spike for CGC last week on company-specific news. But today, it's still a nothing burger. It's still a dangling carrot. I don't even know what the news today was. Schumer said something. Schumer said, hey, maybe Congress is going to pass, blah, blah, blah. We've been hearing the same thing for so long, but the market is responding much more favorably in the current market environment. So big volume spike, daily bull flag confirmed. We did break 383 and 385, so CGC getting to the highest price in a couple months. Now 430 is the most important level. We had an hourly little bull flag confirm into the end of the day, but with no follow through. And peers are consolidating on the hourly into the close. CGC is a relative bull. CGC divided by TLRY. All CGC since it had that company specific news about getting some exposure in the US. So I have shifted. I was trading CGC as a bear during this, and now I'm trading it as a bull during this. US Cannabis not participating nearly as much. It was green, but individual names were up 4 to 7%, while CGC was up 21% and TLRY was up 14%. So notably more opportunity in these higher liquidity, higher volume Canadian names, at least this time around. And bulls need follow through on USMJ because MSOS has a daily uptrend confirmed. Sure, that looks good, but look at all these individual names. TCNNF, pretty much right there. GTBIF has earnings coming up. Bull break with zero follow through. Cureleaf did not break bull. CRLBF did not break bull. So just weaker is what it boils down to. Let's do CGC divided by MSOS. Where should I be focusing as a bull? Well, CGC has been way stronger ever since CGC had its specific news. So until I see something shift, CGC is the bull play. I sat down at the computer today after being on the road for a few hours and grabbed CGC during this tightening range, playing off 5-minute support of 357 and scaled out into this move. Shorted this resistance. 383 and 385 was key resistance, so I shorted there for a little flip. And that's it, just a couple little day trades. But again, the volatility is there for both directions. It was a big day for bulls, absolutely, but even bears had opportunity. This initial pullback, 5% drop, 3% drop, 5% drop, all on the same day. Gold is extremely weak still. Weekly lower high is set. Weekly lower highs have been being set for 6 months. Weekly support back in play. The miners are stronger. Silver is stronger, but they're not going anywhere if gold can't find a confident bottom. Oil, daily consolidation underway. Bulls must hold 82.63 to keep this daily uptrend going because we must break 92.34 if we are going to have a weekly uptrend confirmed. So bulls need to set this daily high or low ASAP, ideally tomorrow. Natural gas daily uptrend confirmed after the extreme dump. So higher low and higher high. Now we zoom out knowing that we're scouting a weekly lower high to be the result of this bounce, but we have a 4-hour and daily uptrend as our guide to see how much bounce follow through we can see from here. Already a nice 20% plus off the lows. And that is where we stand. So pretty much tomorrow, going to take some day trades, but we're going to be waiting for the FOMC and haven't determined yet exactly how I'm going to approach the FOMC because I will have some open long swing positions. I might just offset them with some bearish positions, but that's pretty much what we're all looking for this week now from here. NASDAQ key double top resistance, dollar weekly EMA 12 support, FOMC Wednesday 2 p.m. Eastern. Hope you had a great Halloween holiday weekend. Music festival was a lot of fun, a lot of driving, but very sore from dancing. Had some fun costumes, and here's one of them.